Hey everybody, it's your boy Chicago Sean. How are you? Happy Monday night. Today was a holiday. You could see it's winter weather out my window here in outside of Boulder, Colorado. It's been cold. Boy, we had a high of -1 yesterday or something crazy. Ugh, I don't know. Hope you guys are staying warm wherever you are. And for those of you who are in warm weather cities, I'm a little bit jealous right now, but it'll all work out. We love the weather here normally. It's just been a little cold lately. So in this video, I'm going to touch upon a couple things. I'm going to talk about what to do when you're holding short options when a stock is about to pay a dividend. I'm also going to walk through a little example, a trade where I screwed up, where I totally messed up, and I didn't pull the trigger when I should have pulled the trigger. And then lastly, I want to talk about the importance of checklists and having a process so that things don't get missed throughout the day when we're fighting with the markets. So I'm going to flip to my screen here. I'm going to share you my computer screen. And this is my trading platform. I use Tastyworks, as many of you know. And I've got Microsoft up here. We can pull up the chart real quick. Microsoft's had a big run over the last few weeks. But a question I got this week was, what do you do when a stock is about to pay a dividend? Microsoft just paid a dividend. And the person was asking me, hey, I'm holding some short calls as part of a spread. I've got I think they had a bull call spread on. Doesn't really matter what the spread was, but he had a spread on, and part of that spread had some short calls. And so he was concerned because he got an email from his broker, and most brokers will do this, regardless of the actual threat of your short call being exercised. So the broker has to let you know, hey, you're at risk of getting assigned. Now, the guy wanted to know, am I at risk of getting assigned? Well, a nice little hack that you could do, and I'm going to open up a chain here in Microsoft. You're only at risk of getting assigned in a short call is, number one, the call has to be in the money, right? If it's out of the money, you don't even need to worry about it. But if the call is in the money, let's say I was holding these, these 230 strike calls with Microsoft trading at 245, right? Clearly very much in the money. And let's also figure out, we need to know what the dividend is that Microsoft's going to pay. And a quick Google search will let you know what the dividend is going to be. I don't know what the dividend was, but let's just, for argument's sake, let's say the dividend was $1.50, okay? So if today's the last day before the stock goes ex-dividend, well, this is what I need to do. If I know that Microsoft is going to go and pay a $1.50 dividend, and I'm holding these 230 short calls, I need to know how much of this price, the bid and ask, how much of this is actual premium versus the intrinsic value of the call. Well, a very easy shorthand way of doing this, to finding this out, is when you got the calls here, look at the corresponding put at the same price. Okay, look at the 230 puts. They're bid 52 cents, offered 72. Ballpark, let's call it in the middle. Let's say the price, the fair value of those puts is 62 cents. Okay, that approximately tells you what the premium is in the calls. Okay, now this premium of 62 cents, that's less than the dividend that Microsoft's about to pay. Remember, we said we're guessing that it's paying $1.50. I don't know exactly what they're paying. Don't hold me to it. I'm just trying to do some illustrative purposes here. But if Microsoft has declared that they're paying a $1.50 dividend, and the short calls that you're holding heading into the ex-dividend date have only 62 cents in premium, your short calls will get executed, okay? Now, don't freak out. If you get executed against your position, that's not the end of the world, right? Let's say you were in a spread and you were long the 220 calls and short the 230, right? If you were to get executed against your calls, all that's going to happen is, let's say you had one short call, you are now going to become a holder of 100 shares short in Microsoft at a price of 230, right? So you're going to have you're going to be short at 230, even though the stock's trading at 245. But that's okay. You're still protected, right? Because you still own the long calls at 220. So at the end of the day, you're not really getting hurt. Now, the broker may issue a margin call if you don't have enough capital in your account to cover the margin requirement to hold a short position of 100 shares of Microsoft. But don't worry. All you need to do in that case if you got assigned, is the next morning, you just go in and you close the short call or the short stock, right? You just close it, market buy to cover it. You could even reestablish a short call at that same strike or a different strike. And then you'll be okay, right? You don't need to send them more money. You don't need to freak out. The only cost to you really is going to be the fee that the brokerage charges you for your assignment fee, whether it's $5 or $15. Every brokerage is a little bit different. But look, getting assigned sometimes can be a pain in the ass, but it's not the end of the world. You're not going to get screwed on it, okay? No reason to freak out. I freaked out the first time it happened to me, but then I realized, you know what? It's not a big deal. But again, the shorthand to know if you're at risk of getting assigned is look at the corresponding put at the same strike. If the value of the puts is less than the expected dividend, then you can expect to get assigned. Now, if the dividend that Microsoft announced that they're going to pay is only 25 cents and there's premium of at least 62 cents in these calls, very unlikely you'll get assigned on these calls. Okay? So I hope that answers the question that people had about what to do when a stock's about to go ex-dividend. I hope that was clear. Now, the next lesson I want to go through real quick, and I wrote about this and blogged about it during the week. I put a trade on in MJ. I bought stock in MJ, the marijuana ETF. And sometimes it's better to be lucky than good. But you could see here, I bought just 125 shares. I'm not risking a whole lot of money on this trade, but I bought it at 24.09. I bought it right here on this day. This was Monday on this green spug right here. Well, look, sometimes it's better to be lucky than good. I didn't know this thing was going to take off, but as you can see in 3 days, this stock shot up. I was up something like 45% in 3 days worth of trading, 2 days worth of trading. I mean, it was unbelievable. In fact, it traded even higher than this price in the after hours on this day. It was unbelievable. Well, I came into trading on Monday morning. I'm sorry, it was Wednesday morning, this high point right here. This is the 10th. I came in with the stock trading around $35 when it opened. Man, I said to myself, Sean, this is quite a run. Let's lock this in. Let's use options to lock in some profits, right? And what I considered doing was putting on what's called a collar. Now, a collar is basically what you do is you sell out of the money puts at a higher strike. So when we were trading around 35, I was looking at selling the 40 calls in March, okay? Look at selling the 40 calls, and the premium I could have brought in for those, I think it was like $5 or $6 for that contract. I could have immediately taken that credit, that $6 credit for those 40 calls, and purchased a 30 put, which at the time was bid at like $5, $5.50. So I could have sold the out of the money calls up here for $6, bought the 30 put for $5.50, yielding me a net credit of 50 cents. And then I've locked in a selling price of at least $30 for my position, right? If nothing else, it would have bought me more time to let this stock, this ETF kind of settle down and find its range and set up and see if it's going to break out again. Give me time to formulate a better plan. But instead, what did I do? I didn't do anything. I sat there with a deer in the headlights. I was busy with some other things, and thing got away from me, and next thing you know, this stock was selling and I was just frozen. Don't do what I did. I'm not sharing this because I'm telling it to you because you should be doing this. I'm sharing this to you to let you know that I screw up all the time, and sometimes when you see good trades, you got to get out of your own way. If you know the smart thing to do it. Pull the trigger. I didn't pull the trigger, and I'm kicking myself for it. I'm still sitting in a small gain right now. I'm in this for a longer run. I think this stock, this ETF is part of a bigger move that's going to be going on for a while. When I got into the trade on Monday, I certainly was not expecting this ramp. That was not part of my plan. That's not why I got into it. I wish I had that kind of crystal ball. I don't. But man, sometimes when the market hands you a gift and you got a good way to hedge up and lock in some profits without exiting your position, you got to pull the trigger, man. The last thing I want to share with you is I got a little checklist here up here on my screen. The contents of the checklist are not important, okay? I got some items in here. These are unique to me. I don't need you to get lost in the details of what you see here. I don't know if you could even see this, like maybe if I blow it up a little bit, make this a little bit bigger. But this is just a little checklist that I have, and I change it from day to day, but I keep a checklist around every day. I keep it on my screen. I use Evernote to do these things. Again, don't get lost in the details here. They don't matter to you, but they matter to me. And these, for me, it's 6 items. These are things that I want to go through every day when I'm trading. I want to make sure that I honor all 6 of these items. If I do that, if I do nothing else but do that, then I feel like I had a good day. Okay, so I just want to throw out the idea that, guys, you got to have a plan. For me, it looks like checklists. I have checklists. I go through, I go bing, 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 bing every day. I usually do it first thing in the morning. It's kind of my routine, but I want to make sure I hit every item on my checklist, at least check it out. Maybe I don't actually do anything, but I want to make sure I've looked at every item on my list and processed in my brain or trade what needs to get done. So just want to throw that out there, guys. Best practices, you got to just kind of get automatic about these kind of things. That's the key to success over the long run. So guys, that's all I got for you today. I hope this was instructional. I hope you learned something. If you have any questions, you could put comments in the YouTube. You can reach me on Twitter. Oh, and last thing, guys, if you're in the Colorado area where I live, or if you plan on visiting here anytime soon, go to my website, go to chicagoseantrades.com, and at the top of the page, look for the hike. So there's a little banner up there, a little button that says hike. Click on that and give it a read. If you're interested in some one-on-one mentorship with me in person and you're in Colorado or you're coming through and you want to go on a hike and talk trading, I think it's a pretty cool little thing I'm doing. I'm trying it out, and I'm curious if you guys would be interested. So check it out, and have a great trading week. Trade them well. I'll talk to you soon. Bye-bye.